All right. Good morning, everybody. Hope you guys are having a great morning. It is Monday morning. Yeah, Monday. I like to kind of kick it off, get started. September the 14th, it's our daily market commentary. For those of you that are new to the channel, do me a favor, make sure that you click the subscribe button, hit the notification bell, all of that fun jazz. If you are a returning viewer, do me a favor, click that little thumbs up icon down there. It means a lot. I appreciate it a ton. We're going to do what we do each and every day, identifying potential breakouts and reversals from our educational perspective. Okay, let's get rolling. We had our live trade room last night, and our ES position last night off of this little 15-minute reversal trade. Actually, was with an entry right off of here. Wound up going to target. Now we did get to target. But then in our overnight, we got a little bit of basing here in front of the level, and we did pop out above the zone. So, oh, you can't see my chart. Well, that's because my giant head's in the way. There we go. Let me shrink my giant head. Sorry about that. Appreciate that, Dennis. You're the man. All right. I shrunk my head, Kurt. Lord knows nobody wants to see this face more than you have to. All right. Anyway, let's go back to this 15-minute level that we looked at. All right. No, Alex, I don't have too much brightness. Or are you talking about, off the top of my bald dome? Anyway, so here was the 15-minute level that we looked at last night for a potential long. Got a nice trade off of there, and it actually wound up running to target. A lot of guys grabbed a couple of points off of there. I will say, though, I anticipated we did get a little poke above the level before we got basing. And then we did get some basing and another poke above the level. Now, technically, your stop would go below the last pivot. Well, my last pivot in here, you could use this as your lower pivot. You could even actually go all the way down to these areas here. We haven't really done much off the breakout. I'm actually pretty surprised we didn't do a whole lot. And so that was a very, very small level in there that if you didn't get a piece of, then, and maybe you got a small stop out. I mean, we did get a little bit of a run from there, but certainly not a 2-to-1. It wound up running about a 1-to-1 if you took your stop just below that high. And so what am I looking at for today? Well, what I'm looking at for today, let me get rid of this line. I looked at this line last night as, okay, if we get above Friday's Globex high, that's going to be an indication that we have a chance to move higher. And so in looking at that today, I think that, when we look at our overall price action, we're seeing our downward momentum slow. This was a very big reversal candlestick, though. I mean, where I saw that downward reversal momentum slow, this was a pretty big reversal candlestick on the 4-hour chart. And so when I look at the NASDAQ, we had a little breakout line here. We actually got a better run on the NASDAQ breakout than we did in the other two markets, although it even has come back to its breakout level. So overall, when I'm thinking of this, my gut tells me that we're going to resume our bullish move up higher, and that this pullback is slowing down. Now, why do I say that? I say that because if you look at our impulse moves and our corrective moves have gotten smaller, our corrective moves have gotten bigger, and my downward momentum is for sure slowing, right? As I see a little bit of almost a double bottom pattern here that's formed on the 4-hour chart. It's not there yet, obviously, but our 4-hour momentum has stalled a bit. Now, that tells me that if I'm going to look for an upward movement, then I need a reason to get long. And my breakout trade here did not hold through. So now where's my reason to get long? Well, we've got this area down here on the hourly chart, which is from last night's Globex session, although that was the retest of that small 15-minute level. And then all the way lower, we have these areas of demand. Now, if these areas of demand don't hold, we also have the gap fill. So there's really a couple of different places to look. I will say the gap fill level on the equities markets, I'm not a huge fan of. I've not been a big fan of the gap fill level on the equities markets. Tend to be, especially when you're going counter trend, that is typically going to break right through. And so you've got this little 1-hour level in here where we could see a bit of a reversal But ultimately, I don't love that one either because we bounced off the 15. That was the 15-minute level here that we bounced off of and got to move away. And my point behind saying all this is that I'm not in love with any of these reversal levels, right? I don't know about you guys at home. Is anybody in love with any of these reversal levels? Anything at home that you guys are looking at, feel free to type it into the chat box, that is making you want to jump in either long or short on these reversal trades. For me, there's not. I've got a pretty good supply area up here at 33.99 by 34.07. I think that's a good 15-minute level. And then as far as demand goes, I don't have a whole heck of a lot. I will say that if I get some basing in front of this area here, I might have an opportunity to get short if I get some basing here. But other than that, I just don't see a whole heck of a lot. And this would be a 15-minute basing, so it would be very small risk. Now, why is that? That's all because we weren't able to sustain the move above Friday's high. I really thought that move above Friday's high would be sustained. Now, in the NQ, we looked at this one last night as well. Our supply level, there's an hourly supply level that's actually pretty clean. Our Globex high in the NQ hasn't been touched. We got above the Globex high in the S&P, but not in the NASDAQ. And so the NASDAQ hasn't given us the same follow-through and the same strength. So what would I look at going forward is that in order for that to follow through, we've got to break through that level. So we've got a supply level just in front of it, and I'm going to leave that supply level intact. Now, that supply zone on a 15-minute's a little cleaner to see. It's 11.301 by 11.328 as far as your overhead supply. And that overhead supply, I think, is pretty clean overall if you make it up to that level. Now, we are basing a bit in front of it, but not so close yet that I couldn't still get a 2-to-1 reward to risk. If, just like the S&P, if we get basing in here, you may get a little drop. We could move we could move down below here, but I'm not in trust. I don't trust the gap fill levels. I just haven't for the equity markets, and so I'm not looking for a long on the gap fill levels of the equity markets. The Russell, now, of my short markets, the Russell was the one that we looked at yesterday as the probably the strongest potential for the short, although we're up probably the most today. When I go to my 4-hour chart, it's probably the cleanest of the downtrends and has given me that lower low right here, just slightly, but I did still get a lower low. So on the Russell, if you're looking, I think you could do a P-Bochi. I don't have those yet. I don't have my 3 touches as of yet, so I still would need those 3 touches to form. They're not there yet. So I've got a couple of touches in here. I still need basing in that 3rd touch in there on both of those. I would agree with that. Yeah, watching on the daily chart on the equities that may turn into another supply level. So yeah, so if we look at the daily chart, and I will say that the daily chart, we've got a decent little bit of a pullback. It could turn into a supply level. Once again, it all depends on if we fall from here, right? I will tell you that one thing I was looking at last night is that my S&P on a weekly chart has pulled back into a decent little pullback off of this zone. I've got a reversal off the weekly on the SPX, and then if I throw my moving averages on there, the reason that I do use moving, oops, that's not the one I wanted. Not the weekly, the daily. When I look at the daily SPX, we're sitting right above the 50-day moving average, which is usually a pretty strong moving average. Now, we break below the 50-day moving average. That's actually typically a fairly weak, it's a fairly strong sign of weakness, but we've been unable to close below it in the S&P. If everybody notices, we've touched it, we crossed below it, but we were unable to close below it. So I think there's a good possibility that we're going to see, and there's a tremendous amount of equities that are setting up with a similar setup. They've dropped below the 20, they're sitting above the 50. I'm not saying that it's going to, but this is where you get prepared to load up on your positions, because this is the kind of pullback that most people, and I'll say most people, most traders, because for some reason as traders, we want to be perma bears. Does anybody find themselves in that? Type it in the chat box. Anybody find themselves as wanting to be perma bears? By the way, guilty as charged, right? I'm always looking for the darn thing to fall, and it's just because it's easier to make money in a down market is what I find. And so we find ourselves being perma bears at times. And while this could just be a nice pullback and an opportunity to get long, I'm not saying that it is as of yet. I still need proof above some of those areas, and that's why I'm looking at some of these pivots as if price gets above some of those pivots. Oh, it'll happen, Ken. Something will happen. Now, looking at the Russell, once again, I think that the Russell's probably the one that's a bit more on the bearish side. And on a 4-hour chart, that's a really nice reversal. So you could even go candle to candle on here if you wanted to get short below that level with a stop above that high. So my thoughts are that overall, I think that our probabilities are that we continue to trade higher in the bigger picture scale. But if you're going to go short, I think the Russell's your better short market. Although the S&P really disappointed me not being able to hold above Friday's Globex high. The fact that we got above Friday's Globex high in the S&P and were unable to hold tells me I need to be nimble and be willing to look at other things. Now, still gave us some good intraday opportunities, especially starting last night. But I still want to be cautious of those markets. So I'm going to share this grid with you right quick. Let me put this also in the Trade Updates tab. Hold on just a moment. All right, share grid. That way you guys have a copy of it. All right, let's move over to commodities. Once again, I'm trying to keep these things at 30 minutes, so I'm going to go fairly quick. If you have questions, type them in. I'll do my best to answer them, but my goal is really to make this thing stick at that 30-minute mark. In crude oil, we are very sideways in crude at the moment. On our daily chart, we can see that we're creating a very nice bear pennant pattern, bear flag, bear pennant, with the strong move down and then a bit of a triangular shape. These are very strong. You know, we're still at an inside day off of Friday's markets. You can take the breakdown outside of the pennant pattern if you choose. That's definitely always a bit more risk because it doesn't follow the same rules as a traditional breakout trade. But when I go to my 1-hour chart, this is our low. Your most conservative entries below this 36.13. If you wanted to be a bit more aggressive, you can look for a breakdown below one of these areas in here. Friday, we thought we would get a better breakdown, and it just fell apart. It just we got a little bit of a poke through, and then it popped back up. It's really gone nowhere. So the less aggressive is the breakdown below 36.13. Yeah, you're right, Dennis. Another potential level forming. I would definitely agree with that. But not a whole lot happening. Now, in gold, last night, our gold level on the hourly chart, that hit. We did wind up coming up, but not above this candlestick in here. So if you held that in an overnight, you actually got a pretty good move away. I will say you should probably look to be taking some profits because it came to the opposing level here, which was this fair price zone. So I need to remove that trade at this point. And we still had this near miss level from Friday, and that was a near miss area of supply that I think is still valid if we get up here, but it's a confirmation entry. Looking at a very small time frame demand trade, this is a day trade level that's forming right now, 1950, 1951. I mean, you're a super small level in there for a short-term day trade as price comes back into that zone. I'm going to throw a quick alert on here. Oops, not at or above, you dummy. At or below. I got watches going off. I got phones going off. I got bills. You make one mistake on an alert, and I got 19 different things happening. Nat gas. We did the Nat gas gap and go trade last night, and so getting long above 3.3223. Our target was at 2.38, so we hit our target in the overnight. So I'm not sure how many of you were in there last night. Anybody in there stay in that trade and hold that thing overnight? Let me know if you were able to get something on there. Yeah, the alerts on Thinkorswim are excellent, Dennis. I love it. I get a text message, a chat, all kind of stuff. So love it, Tushar. Love it. Close. Get a nice. Jeremy, Trent, Nathaniel. Good job, guys. I'm glad you're able to take that for a little bit of a coin, and you should have taken target 1 at this point. So target 1 was 2.38. So hopefully you took target 1 for a nice little 2-to-1 trade. I'm going to remove the lines at this point. Still that's we call that a lunch money trade, right? Even 1 or 2 contracts on here, you pulled out about, was it $200 and something? So it was a nice little overnight trade that is still kind of running a bit. It was a little bit suspect because I will say it was against the 4-hour trend. But now looking at our 4-hour trend, we've put in a pretty decent reversal candle. I would now start to look and see when that is a heck of a lunch. I'd like to look and see when do we get a reversal back down. And I think that we could start to reverse back down in here. So as we come back down, look for some basing somewhere around 235, maybe even a bit lower, to see if we get a breakdown opportunity. Because I still want to go with the big picture trend. That was a nice intraday small trade, but let's still stick with the big picture trend, especially because we're putting in a reversal candlestick right here. Let's see, copper, not a whole lot's happened in copper since last night. Soy, we are looking for, if we pull back, we identified this little 15-minute area last night to be back in here. Bologna sandwich at the Ritz. Steve, you got class, man. And then on corn, we've got a 1-hour wick over wick that we're still kind of above there. Not a whole lot of movement overnight. So let me share this commodities grid. All right, and then let's go to bonds and currencies. So on our bonds and currency markets. So starting here with the ZN, I just don't see any reason to do anything else with this. We rolled over a bit last night, but there's really not a whole lot. This is super wicky. When I see all these kind of wicks, I think of it as a thorny trade where I can put my hands in a thorn bush. I might get a berry, but chances are I'm going to get bloody. There's a lot of thorns in here, and I don't want to get bloody at this thing. So I'm gonna stay away from this position. I don't like this at all, actually. The Aussie. So in our Aussie position, I'm not going to spend a lot of time on a lot of these currencies, although if you guys want me to look at some individual currency pairs, we can. But what's our 4-hour on the Aussie telling us to do? What's the 4-hour chart giving us pretty clear indication? As we can see, we had a big run up, and then we had price come back down, and now the Aussie's given us a very clear indication of something right here. Very good, Liz. It's giving us a clear indication of nothing, right? Oh, meh is the one I like to hear. There's just not a lot going on. So now I will say that we are setting up for a strong move. I will say that. We're setting up for a strong move because we have a symmetrical triangle pattern here. Now, how do I count a symmetrical triangle pattern? When I look at any of these, and really I could even connect it all the way up to here as the start of this. When I look at these symmetrical triangle patterns, what I'm looking for are essentially 5 different touch points. And I have, even if I don't include the first one, 1, 2, 3, 4, 5. They've got to be alternating touch points. Now, oftentimes when you do this, and if you take this, you could even start it here. This is typically a measured move from touch point 2 on the breakout. Now, I started this down here. This one I realized secondary, but in reality it starts here. But we'll take our measured move from touch point 2 to the opposite side. This is your typical measured move. And then on a breakout, you would anticipate that price would move this far up or this far down on a breakout. Now, taking a look at that from number 2, from touch point 2, that would put us right here at this area of supply and pretty darn close to this area of demand. Not exactly into it, but really close into this area of demand from touch point 2. Now, if we start our triangle from up here, and once again, this goes back to the unfortunate subjective nature of price patterns at times, now you'd have a measured move that's a bit bigger, which takes me slightly higher on this side and right into the level on this side. Point being is that I'm not sure which way it's going to move, and I'm not going to take a breakout on either one. What I still would need to see is, let's see if we get a 15-minute breakout above here or below here. Now, how would I get a 15-minute breakout? Why am I saying 15? Well, because I'd need 3 touches. And take a look at this. Touch point 1, touch point 2. If I get basing here and then I get the breakout, it's going to be a little bit above my triangle, but it's going to follow the rules I need for a clean breakout, right? On the 15 1 minute down below here, I don't really have the 3 touch points that I would need at this point to make this one as clean. So the upside breakout follows better rules, but this is a 15-minute channel that could provide me with a breakout inside of a 60-minute triangle. Does that make sense to everybody? Any thoughts on that? Hopefully that's taking. We're looking a little bit deeper out there and saying, okay, which is the way that it can go? I don't know which way it's going to break. Overall, my big picture trend is not very impressive one way or the other. When I go even to the daily chart, my big picture trend isn't all that impressive, and so that's the risk that you take in those kind of positions. All right, looking next at the euro. So in our euro position, we've got an alert set up for a potential breakdown below this 1.1848 level. If we get basing inside of there, I think you've got a pretty good breakdown candidate on our 4-hour. Yeah, Alex, we can do that. If I should have enough time. In our 4-hour, I was already on the 1 hour. We are getting a little bit maybe more upside momentum, but definitely you've got some supply up here that we've got to navigate through in order for price to rally higher. So I'm just not going to add anything new to my chart. I don't love any of these reversal points below me, nor do I love anything of the levels above me. I do have a decent little 15-minute reversal here at this unbalanced wick over wick where you may get a retest, but I still like the breakdown below here as the best level. We were looking at it last night, and the markets were somewhere up in here, and so we were a lot closer, and it's rallied up in the overnight. Looking at the Canadian dollar. Now, the Canadian dollar last night, we were looking at the minute zone, and this one broke through for a small stop out. This was actually a pretty clean level where we had a base drop with a wick over wick zone, and then price attacked that level and then literally just blew right through it. There was no do not pass go, do not collect $200. It was just, there's nothing good there for us in that trade, which not overly surprising because my 4-hour is still pretty sideways. So at this point, once again, like with my other currencies, I'm just going to be a bit more patient and wait for a strong move one way or the other. And I think what we're really waiting for is a strong move in the dollar, right? That's ultimately what we're looking for. Great British Pound, we had a nice short off the pound back in here. We now have a breakdown line below this area, this 27.72. If we continue to rally up, you've got a fairly clean, unbalanced wick over wick level right here, formed at a pretty decent time of day. So let's see if we make it up into that region. I didn't even consider that last night because, frankly, I didn't think we were going to make it that high. It's not as clean, actually, on the 15-minute chart. You know, looking at this on the 15-minute chart, I'm going to move it up because it's already an unbalanced wick over wick on the daily or on the hourly. I'm going to move it up to here, 1.2966 by 1.2983. on the 15-minute chart. And then Japanese yen, so looking at our Japanese yen trade, we're very much in between our levels of both supply and demand. We did get a little bit of the move away from this supply here, but we were looking for a confirmation entry. And so now nothing in here is exciting me. I mean, there's like nothing. So I'm going to leave this one alone. I mean, as I look at that on the hourly chart, I don't see anything that's striking that makes me want to jump in. This level right here is probably my best, and we're still pretty far away from that area. Let's see. So Alex wants me to look at the GBP NZD. Let's see. Give me just a moment to start with this one because this is one that I haven't looked at maybe ever. So looking at my trend direction, I've looked at it at least once because I got a line here. I've got a very strong downward trend, but that strong downward trend looks to be just like some of our other strong down trends, slowing its steam a bit. If I throw a, let's throw our RSI on there. My RSI is giving me a little bit of positive divergence there. If I throw my MACD on there, which is the one I normally use, we're seeing a little bit of positive divergence. But overall, trend still continues to go down. Yes, Olsey, we can do that. With the trend continuing to go down, we'd want to look for a quality area of supply as a reversal. Now, by definition, this is going to be the clearest, most obvious area of supply. Question is, do we make it there? That's a pretty strong move up. Now, if we do make it up to there on our 4-hour, will that change my trend direction? Not really. If we make it up to there without putting in new swing highs and new swing lows. If we start putting in new swing highs and new swing lows on the way up to there, then that would switch to a confirmation entry. When I look at this on a smaller time period, call it the 15-minute chart, you've got another nice little area of supply right here on the 15. If price makes it up to that region. From a day trade perspective, you could get a breakout above this region here, but it looks like we're starting to sell off of that piece. If we get a breakout, you could get a breakout somewhere above this area here for price to make it up to there. Your first target would be this 1.9365. But I like this, the one up here is the best one. All right, let's look at the Swiss. On the Swissy, remove these lines. So a little bit on the bullish side. This was a nice gap up here. Oh, no problem, Alex. No problem. Thank you for asking. This was a nice little gap up that we had here. Price is kind of in a little bit of a gap and go scenario. And where's my next area of supply? Well, if I go back to an hourly and zoom in on this, none of this supply in here is very clean, aside from this area here, but this is a retest of this area here to the left, right? And so I think we might make it up to that region. If you wanted to take a pullback to a smaller area of demand, I actually think that might be the way to go for price to trade up into that area. So look at that one, Olsey. Make sure that there's no basing in front of the level. See that it'll fit your risk tolerance before you would jump in on something like that. But I think that would be the place to go. Couple of stock ideas. Let me share this with you real quick. Okay. Couple of stock ideas. I know everybody always wants to know, what's Apple doing? What's Apple doing? So looking at Apple this morning in the pre-market, we're trading at 113, so up about $1 or so. Now, that would not put us quite yet high. Friday's high was 115.23. I don't have a huge reversal candlestick here yet, but Apple's given us a pretty nice pullback for an opportunity for those of you that are interested in Apple to get long, for price to continue to trade higher. That's a pretty healthy pullback. Now, on that move that we've seen price come down, that's been a decline from its high of 20%. So that's a 20% pullback in Apple, in the price of Apple in the last few days. The last time we saw Apple pull back that far was something like this area in here, which was about a 30% pullback. And so next, is Apple going to be a decent investment? Well, if you think that it is, wait for you to get a higher high on a daily chart on a reversal candlestick. If I throw that moving average study that we talked about earlier today, we're below the 20, above the 50, inside of that bull area. The last time we got below the 20 and above the 50, you had a nice strong move away. Now, the time prior to that, we saw the weakness then on the slowing of momentum. It's not so much that our momentum has slowed. I think this was a very strong profit-taking move down. And so I think we may be able to get in there. Yeah, I like it at 95 as well, Dennis. If you look at our level here at 95, you've got a really clean zone here at 95. So I would agree with that as well, Dennis. I think that's a pretty good level and a pretty good setup. So, all right. Well, if that's all, if anybody has today, if you've got any questions, as always, please feel free to send me an email. I'm going to type my email address into the chat box. It's chuck.fulkerson@tradersarmy.com. So please feel free if you have any questions. Kevin, bull call spread or sell a call to own? That totally depends on you, Kevin. If you're willing to own it, sell a call. You mean sell a put to own, I imagine, Kevin. If you're willing to own the stock, then certainly sell the put somewhere down in here. Now, I will say this. Look at our volatilities. If I look at my volatility, we're coming down in volatility. So selling an option might actually be okay down here at that 95, but we're nowhere near where we should be for selling an option, right? And so it's not a clean setup for selling that option to own it. So I think the bull call spread is probably the better way to go, Kevin. All right, everybody. Well, that's all I've got for today. I will be back in tomorrow. Once again, we'll try to be, like I said, I'm going to try to be live every day at 7 o'clock. I am not committing to that, but I'll do my best. So, all right, everybody. Talk to you soon. Have a great day. Thanks for joining us. Remember, share the link with friends. Tell others about our live trade room every day at 7 o'clock. It's awesome to have you all here. See ya.